What's up, everybody? What's going on, Bosquet's FX family? I hope you guys are all doing good. And welcome back to Bosquet's FX YouTube channel. We really appreciate it, guys, to have you back once again here. As well, guys, we would like to thank you all who just subscribed to our YouTube channel. If you have not yet done so, please kindly hit the subscribe bell and turn on the notification icon so that you will not miss out any new concept from this channel. So guys, in today's video I'm going to share with you how to take advantage of your failed order block or your failed supply and demand in your favor. Meaning, let's say you have lost on your first trade, you are going to take another trade using the same setup, and then you make more money, and then you stop blowing your accounts. So what you have to do, you just have to watch this video until to the end. As well, if you are new here, we also talk about smart planning concept, ICT concept, and order block strategies. If you are looking forward to learn about those concepts, you're most welcome to join the family. So guys, as you can see here on our chart, we have GBP USD, and that's where we are going to show you the example. But before that, we'd like to show you some chart idea which have to be on your mind as always. So what you have to do, you just have to listen very carefully so that you will understand what I will be trying to say on this. So what you see here, guys, let's say we did have a market structure breaker, right? The next thing which we anticipate is a correction to our demand zone area. And let's say our demand zone area will not be able to hold the orders, but the price will come and take out that demand zone, as you can see, and then the price will give us a rejection, and then they will continue going down. So what you have to understand, you have to understand that you focus on the move which was responsible, or the last opposite candlestick which was responsible for breaking out this demand. Meaning this move here was being formed after the break of structure, meaning this is where you locate your supply zone area which was responsible for breaking out this demand zone area. So this move is being created. Why? Because they want to create a liquidity inducement zone area. So this zone will now become a liquidity zone area whereby the price will come and induce that momentum going into the actual supply zone area which was responsible for breaking out this demand zone area. Meaning you focus on the last opposite candlestick which will be responsible for breaking out the structure, right? Same thing if you are looking for shorts, right? If you are looking for shorts, let's say you have identified your break of structure and you anticipate a reversal, and then you find out that that supply zone area will not be able to hold the orders, but the price will give you a break of structure again, right? Meaning this zone will be created after the break of structure. It's a liquidity zone area. The price will come back to the first order block which was responsible for breaking out this supply, meaning it will now become our flippy demand zone area, and then the price will go to the upside. So always when you open your chart, right, always when you open your chart, you have to understand your left side, and then you'll be able to predict or to anticipate a move which you want to see on your right side, something like that. As you can see here, we do have GBP USD, and I'm going to show you how to take those trades in 15 minutes time frame as well. As you can see, we did have our supply zone area, and then the price fails to take out that supply zone area, but the price had created a demand zone area. As you can see at this momentum, we did have a break of structure right here, right? We did have a break of structure, something like this, as you can see. And you can see that this zone was being created after the break of structure, so it's a liquidity zone area, something like this. the liquidity zone area, and this will now become our what? Our supply zone area, right? This will now become our supply zone area, meaning this was a good supply. It managed to hold the orders, and this was a bad demand zone area because it fails to hold the orders. Now this, it's a good supply because it managed to hold the orders, and that they have given us a good inducement. Then the price continued going down, and we also took a trade right there. We also took a trade right there. So meaning, let's say if you were risking 100 USD, right? If you are risking 100 USD and your account or left with another 100 USD, then if you risk 50, you're going to make more than the money which you lost on your first trade right there. So if you go to 15 minutes time frame, that's where you look for your what? That's where you look for your good confirmation trade. Meaning, as you can see, price came back to our what? To our supply zone, which we have found in 8-4 time frame. They went in and they did give us a breakout structure. As you can see, this is a breakout structure, and this was a change of character. This was a change of character, as you can see, and you can see that we did have a continuous pattern right there. That's where our opposite candlestick was at, right? Something like this. So here is where you are going to take your first entry, which will be a good confirmation entry point. And then we also did have another continuous move. As you can see, the price have given us a drop, base drop, meaning this was another supply zone area which we're going to focus on, right? It's in 50 minutes. Okay, something like that. As you can see, another supply zone which was never being mitigated. Again, this one. So if you now see, guys, you had more than 3 potential good entry points. The first entry, second entry, third entry, meaning if you're going to risk $50 here, another 50, another 50, you're going to risk over like 150. But if you see now, if you calculate the pips which the price have given you with the first pips which you have lost, it's now different. As you can see, let's say if you are going to risk, how many pips was this? This was going to be like near 30 pips, right? Near 30 pips. And look at that. If you're going to take this confirmation entry from this one, look at that, guys. You're going to make more than 200 pips. 200 pips, as you can see. So this will be a good advantage for you to take out your failed order block in your favor. Meaning, if you're going to risk $100, you are now going to make more than 200 or 300 USD on your what? On your failed setup. So that's how you take your advantage of your failed setup. And I hope you have understand very carefully. What you have to do, you just have to use 8-4 time frame, 8-4 time frame for clear views. As you can see, market already give us another market structure breaker right there. The next thing which we focus on this move right here, right? This is our next supply zone area which we like to see price mitigating, but before that we like to see price taking out this zone. As you can see, it's a demand zone area, so the price have to induce that zone area, and then that's how you take advantage of your failed setup. As you can see, this was a rally, base rally, meaning it's a demand zone area right here. So you focus on this candlestick right now. So I hope this video will help you to understand how to take advantage of your failed setup. Thank you. Have a blessed day.